Hello everyone, this is Jeb Hamburger from goldstocktrades.com. Today is February 18th, 2013. It's President's Day. The US markets are closed, but I wanted to give an update to my readers on some very important developments. I've been getting some emails from subscribers concerned about the recent decline in the gold price in terms of US dollars to fall below the 200-day moving average. And so I wanted to update my readers and show them a chart of some key commodities, key metals, and the gold miners compared to yen for the past year. And what we are seeing is in this past summer, we heard the U.S. announce an open-ended QE3, which is a currency devaluation. But we also saw the yen recently announce a major intervention into the foreign exchange market. We're hearing the G20 currency wars, trade wars being discussed. And this is tactics used by countries that are dealing with poor economies to help boost their economies and industries through devaluing their currency. This will make their exports more affordable against to other nations and help hopefully boost and stimulate the economy. The Japanese, through the intervention in the yen, has done a very good job of devaluing their yen. We're seeing copper make a very powerful move over the past 6 months, and especially since November and the recent election of the new Japanese government. Uh, the new prime minister has been using these interventions, and he favors these methods. So copper has taken off in terms of yen. The uranium price has really moved in terms of yen. We see this very powerful uptrend from about below 0.04 to 0.0525. We're seeing gold make a significant breakout compared to yen. We saw this breakout come at the end of December. We're seeing silver in an uptrend versus the yen. We saw test a key resistance point at 0.30. We're going to look at that as a breakout. Platinum has made a very powerful move, and that has now reversed to have a premium versus gold, both at yen and dollars. So we're seeing the industrial metals, and specifically copper, uranium, platinum, to begin outperforming precious metals, and this may be due to the fact that the equity market has rebounded significantly, and the equity market may be forecasting a better than expected economic recovery from all these interventions, and this is putting some demand onto the industrial metals. This sort of risk-on inflationary environment is going to benefit the miners. And we're seeing here that the miners, especially the HUI, which tracks the large cap miners, is really testing some significant support in terms of yen, and we think that it's going to hold soon. Both precious metals and the miners, in terms of dollars, have been in corrections for longer than 18 months, and it's very important when studying the market is to understand what cycle we are in. And the precious metals and the miners have been in a consolidation cycle for over 18 months. The Canadian venture has been in a correction for close to 23 months, so it's extremely extended. We're close to a bottom in these sectors. We're already seeing breakouts in terms of yen. There's increasing support from Europe to announce another intervention to help the European economy. The U.S. may be forced to compete with the yen to make another intervention in addition to the open-ended QE3. So stay tuned. The metals are turning, and so are the miners as we approach a very critical bottom.